selling their met coal assets.
Let's compare this deal versus the Whitehaven buying the BMA assets. They basically paid the same multiple on the trailing 12 months EBITDA, except Glencore have picked up better quality assets that produce with substantially better margin and not located in Queensland, which appears to be completely comfortable jacking up royalties as these coal companies become more profitable.
Righto, g'day money miners. Mate, what have we got installed today, boys? I don't want to mention the first one. I do not want to mention the first one just because we're going to get shit hung on us.
Okay, yeah.
Okay, we're talking about Azure again, but we've confirmed who was buying the shares yesterday. That's been in the news.
We've got interesting chats coming up on Panoramic. Teck asset sales, we'll get into that later on as well
Glencore
as
fine.
Atlantic Lithium.
Yep. And some rapid fire on True North Copper. And
that's it.
another one.
Let's cut to it. A lot of exciting stuff.
Let's talk about rapid fire. Rapid fire in the exploration industry. We're talking as in rapid fire shells going everywhere, which is what anytime exploration do. Like just they do everything.
What do you mean?
They officially do everything today. You know, we were talking about anything. It is have
you got the announcement today?
The anything is gone to actually anything.
Hang on.
Check this out.
What?
Anytime exploration are now into jorks.
Hey.
They can do a jork. Mate, check out LinkedIn. Seamus, look, I reckon Seamus has chucked a bit of polish on the noggin there.
It looks like a very shiny
We would
head.
like to welcome Sarah
shiny.
Dyer, Technical Geological Services and Validation, to the Money of Mine and the Anytime team. Because if you're in Anytime, you're in our family as well.
Wow.
Mate, Sarah Dyer, she's going to be looking after mineral exploration and resource evaluation so they can do a JORC report, anything, litho, geochem, data analysis. I won't act like I know what that is, but it sounds like if I needed it, I would get someone else to do it.
This is really cool.
Yeah.
This is
Sarah
very
had
cool.
a bit of a motto that I feel I've heard.
Well, after she does, like if you round it off with independent geological and regulatory reporting, if there's something else geologically related, her motto is, I'll make it happen or I'll die trying.
Well, welcome, Sarah. This is awesome.
Well, boys, I can tell you right now, Big Seamus is excited with the new geological offering. I'm telling you. You want to know how much?
Tell me.
I'm excited.
He is excited. He is pumped. You can just see that. Should we play it again?
I'm excited.
Really dialed up the you had Shannon just fake talking, and now you've got the real mugs talking. Well done, mate. Well done.
I know. So yeah, welcome Sarah on the team. Now also, all the good stuff happens at the Barn Me shop. The word's got around from one of our little things we put out last week. Check it out, money miners.
Oh, shit. Coffee machine's broken. I know. Call KTA.
Mate, it's taken off. And I told you, call KCA. I told you to take off. Mate, we talked plenty about the underground capability of them, the ITs, the underground trucks, the Charmex, the Normet stores trucks, but, mate, also the surface stuff available for hire. Water trucks. Got to keep the dust out of the lungs, boys, while you're up there. You'd rather them go on the solar panels than in your lungs. So, mate, surface stores truck with a crane.
Wicked.
The crane can't, like if you injure yourself, you probably can't be lifted up using the crane. It's more for machines and stuff.
Yeah, okay.
But look, depends how much of a cowboy show you're running. Mate, 6 4-wheel drive buses to get the most important thing, the people, to and from the airport, to the site, to the camp, back to the weddie.
Because if you couldn't get the people to the site of the wedding, you'd have to
Well,
call
it's,
KCA.
it's funny when you say people. Look at that photo there.
What am I looking at? Oh, yeah. Yeah.
What do you notice about that photo?
It's a really...
Do you want to know something funny about that photo?
Tell me.
You take either of those, either the jumbo or the person away, you can't use the jumbo. Mate, that person is just important as that jumbo. And you know what? KCA supply them too. Not that bloke specifically. Maybe, I'm not sure if he's on the books or not. But, mate, they've got machines, they've got people, bloody labour hire out, mate, they've got it all.
That's a value proposition right there because, yeah, you bloody need a person, but you need the kit.
Yeah.
at the same time.
Can't have one without the other. Can't earn money without paying tax.
You know how to get it though? Call KCA.
Call KCA. Boys, let's get into it. So yesterday we speculated about the trading in Azure. It went up to as high as I think it was $4.37, which was 24% I think above the SQM offer price. Was on pretty low volume. It did pull back at the end of the day. We were speculating it. Word on the decline, it was Pilbara, but the trading activity didn't really pertain to that. But it come out with a change in substantial. Yesterday afternoon, it was MinRes lifting up about 1%. So they're up to 13.56% holding of Azure now. So interesting. Would you thought that? I don't know if it was them all the way through the day or it was the pre-market volume.
Well, Matty, I had a look at the change of substantial notice lodged on ASX because you can actually kind of deduce a few things. What they do is they write in the total quantum of shares purchased in the day and the consideration paid during the day, and from that you can kind of back solve a few things.
Oh, so you know the average price they paid.
Exactly,
Yeah, right.
exactly. And I looked at the average price paid. There was 5 days worth of buying in there from the 8th of November through to yesterday. And in every single one of the days, the average price paid was less than $4. I'd probably wager to say that they actually haven't bought a share higher than $4 because
So that was the retail punters on that lower volume.
I 100% think that it was whatever buying occurred above $4 yesterday wasn't MinRes. It would have. There was some buying of the rumour, unless it comes out and another party was doing it because that price action didn't look like sensible execution at all, and I think that's validated in the MinRes change is substantial.
And it's actually pretty important that detail, them not going much over $5. $4.
Yeah,
rather.
you're 100% right. Like remember when we were speaking with Ben Bailey and the M&A guru, I'm going to call him, and he basically told us and our audience that the highest price you pay for a share matters a lot in the context of a potential offer to come. You under sort of takeover laws, you're not allowed to lob a bid lower than the highest price you paid for shares in the last 4 months. So you can imagine MinRes being pretty disciplined about sticking to a certain threshold, and I'd actually bet that they haven't paid for a share over $4.
Very interesting to see what. No point. We can speculate forever on what the plan is until the plan comes out.
Yeah, let's get into Panoramic. They're one we haven't spoken about for a couple months. They'd obviously had the whole saga at the mill, and then they'd had a pretty
Heavily
awful,
discounted capital raise.
Yeah, pretty shocking recapitalisation of the business at a heavy discount, options involved,
Yeah.
and they've been trading below that issue price for the majority of the time since.
Yeah, so they went into trading halt this morning. They're pending an announcement, which I think will be coming out after market today, regarding an update on financial, strategic and operational matters. So it's never not a good sign to read those words. We obviously hone in on the loss of shareholder money on this show a bit, but when these words come out, like the potential to go into care and maintenance and things like that, it's people lose jobs, which is not a good thing. So it's the impact this sort of stuff has directly on employees is not a good thing. So we never like to see it.
Completely agreed, mate. That said, they still do, given the cap raise, have a bit of cash. So
they had $42.6 million at the end of last quarter, but they raised $44 million. That was at a 45.7% discount. So they were at 9.7 cents. They raised at 5. You look at the chart, they've crept all the way down to 3.5 cents.
Yeah, and IGO didn't follow their money, but from memory, did Zeta play a role or something like that, didn't they?
Oh, jeez. We're
They
going back in the bloody episodes now.
I think you're right.
We don't know what's going on here, but we can see from that quarterly that, that losing money, you hope that, I think they were trying to get to the higher grade bit where they could make money, but plagued by a filter press issue, which cost time and money, and then also nickel price has a massive headwind to face. You don't want to be a high cost miner as a whole bunch of new nickel supply comes online and makes nickel price a lot harder. I don't think Panoramic are the only ones in that boat feeling the pain, but it's bloody not good news, and just hope that there's some light at the end of the tunnel.
It might be one of those bite the bullet, make a decision now to go on care and maintenance until there's a better pricing environment.
Yeah, but I don't think this is a care and maintenance announcement for what it's worth. It just says strategic alternative. So I interpret that as exploring options to maximise the remaining equity value to the best we can, and that's probably looking at potential, strategic alternative sale process, potentially divestment of things, potentially restructuring financing arrangements with Traffy, a whole bunch of things it could be. You just don't quite know yet, but the worst sort of case scenario there is like a care and maintenance admin scenario. I don't think it's that yet. I mean, this is all subject to whatever announcement comes out after this. I sort of read this as kind of the prelude to a pretty negative scenario, but I don't think it's like bloody, a horror announcement yet.
Righto, on to the met coal. I love talking coal because I don't cover it too much, mate.
You're from New South Wales and you bloody...
Yeah, I know. That's why I moved to WA because I didn't want to work in coal. JD, Teck selling their met coal assets. This has got a bit of history in this show too, this story.
It does. We first spoke about this near the very beginning of the show. So that's when all the rumours around what's going to happen to Teck sort of started. So what's happened today is that a consortium involving Glencore, Nippon and POSCO are buying the met coal assets off of Teck. So the price tag is US $9 billion.
Ooh.
So to give a bit of context to the full story here, you've got Teck being in the headlines for the best part of half a year. They'd initially planned to split the assets. That's the met coal on one hand, and on the other hand, you've got the metals business essentially. And it was a bit convoluted. There was a wind down of the super voting rights from the owner, as well as cash flows going from the coal business to the metals business. You then had Glencore trying to come in and buy Teck a couple times. That was at a US $23 billion price. And then, in turn, Teck fought off the bids. They decided they were going to become a pure metals business, which is what has eventuated today. And then on the other hand, you've got Glencore being the majority buyer of this. They have also said that they're going to spin off their coal assets. Now, that involves all the coal assets that they own in Australia as well as its own company within 24 months. So the assets are 4 mines in British Columbia or in Canada, as well as a 46% ownership in a terminal in North Vancouver. And to give a bit of context on the scale of the mines, they produced 21.5 million tonnes in 2022. That produced 7.4 billion Canadian dollars in EBITDA and profit of $6 billion. So huge cash flows.
That was a healthy year for coal prices though, 22.
Absolutely. And then in the first 3 quarters of this year, they've produced 17.3 million tonnes, and that's produced EBITDA of 3.7 billion or profits before tax of 3.1 billion. So like you say, 2022 is obviously a bumper year for coal prices. And those run rates that they were producing at are a bit below what the sort of long term. So they're aiming to produce 25 million tonnes per annum.
Yeah, right. What's this? So what's this mean for Teck, JD, with that cash coming in the door?
So the big sort of premise behind the whole discussion when we first spoke about it is Teck trying to get a big re-rate on all the copper assets that they have and them not being awarded that higher multiple given the all the coal in their portfolio. So we've spoken about that for a while, and I mean, this is going to be one of the first real examples. We've spoken about BHP rather not too long ago, but I mean, they only sold a couple of their met coal assets. They still hold a bunch. There's not been too many examples of a clean break between coal assets and metals businesses, and seeing whether the metals business gets a better multiple.
Is a lot of that money going to come from like your American sovereign wealth funds that aren't steering away from investing in coal and things like that?
Yeah, I mean, private and public capitals, sovereign wealth funds, there'd be heaps of, normal investment managers that are mandated to not be investing in coal. They'll now be able to put that money toward copper assets. So you'd expect a bit of that capital to flow in, and the multiple that Teck trades on in future to look a bit more similar to peers in North America.
Yep.
Looking at that $9 billion that they're getting, that's going to go to pay off debt. They currently have net debt of $4 billion US. They also want to, build a few new mines in the future, so keep a bit of that cash, as well as return a bunch of it to shareholders, but they haven't provided any, firm numbers around that. And it's probably worth noting that for the next 9 months, Teck are still going to get the cash flows from the coal mines until the deal wraps up. So that's about $1 billion bucks.
I love it. I
nothing
love all this.
Nothing to sniff at, right?
Every one of these permutations of these deals with their coal assets and getting rid of them. It's got to just need to hold on to the cash flows a bit longer.
Hold on to it a bit longer.
I wonder if it's, I don't know what coal's like with grade, but geez, they'll be going for the good stuff in the next year.
Yeah, it's not going to be as clear cut as, Gwalia was. I don't think you can just grab all the high grade stuff. But just on copper, the copper assets that Teck have once more, they have been ramping up QB2, this huge copper mine in South America. And, that's had a bunch of issues through construction now into ramp up. So it's not guaranteed that they get, re-rated to a similar rate to a company that's producing the same. Obviously, margin matters quite a bit. And if they're going to continue to have these asset issues, they're going to be marked down for it. But the majority of the CapEx has been spent there.
Right.
Yeah.
Now, these multiples, JD, the price multiple, take us into that, mate.
So the multiple is really interesting to look at, especially given the context of what we spoke about a month ago with Whitehaven picking up Daunia and Blackwater. So we'll start with the more crude metric, and that's just price over annual tonnes.
I thought we were talking about coal, not crude oil.
A crude
right.
metric, mate. So we're gonna just simply put the price of what they're paying over the amount of tonnes they're producing, and you get a number about $360 per tonne. So that obviously involves a few assumptions being made because that's forward looking. If you compare that to Daunia Blackwater, that was $206 a tonne, and the earlier deals before that one were the Stanmore ones, and they were done at $173. So
Yeah, right.
these ones today look a bit more expensive, but we'll get into that later on with the margin being what really matters and the actual cash flows that you're earning. So,
Mate, those metrics obviously aren't capturing like what your margin is on those tonnes you're producing.
that's right. So the assets that Glencore predominantly are buying, as we'll sort of get into now, are just far better quality. They produce a better quality coal, therefore they get a better price, and the margin's way better. The royalty regime in British Columbia isn't as severe as Queensland has been of late, so that just leads to a better price at the end of the day. And we'll throw up some numbers that UBS and Respeculator have thrown around recently. So if you assume $240 long-term met coal price, 95% relativity, and costs at $120 per tonne on that 25 million tonnes per annum run rate that we spoke about, you're getting cash flow margin of US $2.5 billion per annum, $9 billion price tag. You're looking at about 3.6 times. So, I mean, to put it in context, 3 to 4 times multiples for assets that produce a lot of cash is not bad, but you just need to remember we're talking about coal here, so that comes with all these other asterisks.
What do you think about those multiples when you weigh it up and also think about a re-rate for Teck in amongst it?
I mean, at the end of the day, you kind of have to think they're both kind of winners. Teck were under a lot of pressure to sell these assets, and if they do get that re-rate, then they'll be reasonably happy. I can't imagine, Glencore, Nippon, or POSCO are awfully upset about the price they've paid. I'm pretty certain this is going to bear a lot of fruit for them going forward. So you do have the certain risks. Potentially the rules could change, the royalties could ramp up. In British Columbia, you can't rule that out. Costs did escalate massively over the past couple of years, so there's certain assumptions that have to be made. But putting into context, and as we'll get into comparing it with the Whitehaven deal, you think it's just going to be a pretty value accretive deal over the long term for the likes of Glencore.
I'd rather be the buyer than the seller. Teck are banking on the re-rate from the coal, like from the copper only. But
Agreed.
If you just look at the cash flows, I'd rather be the buyer than the seller.
Why the consortium, JD, Glencore, Nippon and POSCO? Is Nippon a local?
No, they're Japanese.
They're Japanese.
POSCO, Korean. So
Steel.
yeah, they have steel industries, and they had ownerships previously.
Is Nippon Steel as well?
Yeah, so they've been rolled into. They were previously owners within the Elk Valley subsidiary of Teck. And that's been rolled into the new entity.
Okay, gotcha.
On your chat about multiples, JD, and I appreciate your point on the crude metric of the tons. And I think I sort of always like these are long life assets, so I think using a multiple on EBITDA is appropriate. It's not like you're going to have some discrepancy in comparing deals that have very different mine life. So a multiple is okay to use on EBITDA. So like let's compare this deal versus the Whitehaven buying the BMA assets recently. Here's the Whitehaven presentation where they say they paid 2.5 times trailing EBITDA. So I assume that's the last 12 months EBITDA. They paid 2.5 times. Here's the UBS quote on the Teck deal saying, this Glencore paid 2.6 times last 12 months EBITDA. So they basically paid the same multiple on the trailing 12 months EBITDA, except Glencore have picked up better quality assets that produce with substantially better margin and are not located in Queensland, which appears to be completely comfortable, jacking up royalties as these coal companies become more profitable. So to me, I think, where's my takeaway? Looking at that, I actually think it highlights that Whitehaven probably overpaid. If this is the market clearing price for better assets and Whitehaven paid the same multiple, well, I just think there's evidence that Whitehaven probably overpaid. So I say that and just watch all of the Paul fanboys come at me on Twitter now, mate. But that's just here's your market clearing price.
Agreed, mate. And I mean, again, putting them both into that context of 3 to 4 or 2 to 4, whatever times multiples, they're relatively cheap for the amount of cash.
Yeah, my point is not that Whitehaven won't make money from it. They will. I mean,
just one versus the
other. These met coal assets aren't coming online. If you take a positive view on coal, which isn't hard to do, then they'll make money. But there's a difference between making money and also getting the best possible deal you could have gotten.
Yeah, and you kind of have to call out the pressures on groups like Teck to sell these assets. It doesn't change the fact that the assets are still going to run. Even if you close them down, the coal would have come from somewhere. And I mean, at the end of the day, the question is, who do you want to run the assets? And that's why it was a big part of the BHP Whitehaven sale, the vetting of who the buyer was. Had to be a responsible buyer. But that's a whole nother sort of debate. And at the end of the day, it seems like both the parties are relatively happy here. So, I mean, that's it, and the deal is finally done. So we'll see where it goes from here.
Do you reckon after they pay the debt, how much do you reckon they're going to return to shareholders?
I mean, it remains to be seen how much of the debt they pay. They would still be a substantial business. They'd probably pay off a bit of it to de-risk the business. But, I mean, maybe they keep a bit of leverage and they don't pay it all down. Maybe they pay half of it or whatever. We'll sort of see.
And do you think they're going to distribute a lot of that left over to shareholders, or they're going to keep a bit in the piggy bank? Are they looking at the M&A front?
I think they'll be quiet on the M&A front, whether they want to advance, QB. Mind you, they've just got it up and running and just getting it into ramp up, but maybe they keep a bit of cash to, take it from stage 1 to a future stage like we see with a lot of those big, porphyry mines in South America. That is another debate, but I dare say they'll keep a bit of capital up their sleeve and won't be distributing it all, but that's just my opinion.
We'll find out, and once we know, we will tell everyone. Beauty. Boys, Atlantic Lithium A11 rejects takeover bid. And Trav, go right into it, because the price and where they're trading and everything is very interesting. I'm sure there's some dynamics to speak to on that.
Yeah, up front, just full disclosure, JD and I picked up some shares today. So again, discount all of our commentary through that lens of our conflict. But the announcement that comes out today, major shareholder Assore International, they offered a conditional and non-binding offer to take out Atlantic Lithium. The offer's at 33 pence. So it's most of the market action for this stock is based over in London, but that equates to a 63-cent in Australian dollar offer price. The really interesting thing is they've knocked back, they've revealed in this announcement today that Atlantic have knocked back this offer. It's a non-binding conditional offer. They've knocked it back twice. Both of those offers were at the same price, the equivalent of Aussie 63 cents. Stock was trading today in the high 40s, low 50s for most of the day. I think it's sort of closed up towards the higher 50s. But when you just sort of looked at the discrepancy between the offer price and the trading price, that's what was intriguing to us. JD, what were your thoughts?
I mean, it was just remarkably low volume. I mean, about 2 million shares traded hands today, which is, at an average price around about 50 cents, $1 million. So this is on a takeover that valued the business at over $400 million. Granted, that the main reason behind that is that it's also London listed, but remarkably little volume being traded. There was an interesting comment at in the last paragraph on the announcement. regarding, why, and you can read into it what you will, but why they're bringing this forward now, given that had that previous bid being rejected at the beginning of October. So they say that they are cleansing the market and that they are issuing new equity, which had been previously awarded to Ghanaian sovereign wealth fund. So,
what do you know about the acquirer here?
Well, for those who don't know, Atlantic have got the, I don't know how you pronounce it, Awaya lithium project in Ghana, so 35 million tonne at 1.25% spod. So yeah, sorry, Trav.
And it's the one that
Azure or Assore.
Yeah, and this is the one that
that's what it looks like.
I got a sore ass from sitting here all day.
And it's the one we spoke about with Piedmont. They're obviously the 50% or to be 50% owners of the project going forward as well. So, I mean, it's obviously one of those ones that's discounted heavily given the jurisdiction that it sits within. On Assore, they are a South African mining group. They were previously listed on the Johannesburg Stock Exchange, but no longer. They've got a number of mines that they own outright and then an even larger number of mines that they are part owners in. So, I mean, one of the fascinating details about this one is that they bid a month ago and then they bid again at the exact same price. You can sort of read into that what you will.
Yeah.
It sort of speaks that they have a bit of discipline around price, it
was a big premium, like to
60-odd%,
60-odd% premium. So they're probably the bid has taken a view that this is a decent enough premium to get let in the door. Of course, the bid's subject to DD, so they haven't actually, looked behind the box yet.
Yeah.
And there's a whole
Was
bunch
there
of
any
risks.
different conditions on the two bids?
There probably was. It didn't actually state that, but there might have been less conditionality associated with the revised bid.
They still require DD.
Yeah,
so they're obviously firm on
my
that.
interpretation was that's true. Yeah.
Yeah, pretty detailed like, but you had a good take on why it's come out now after the second bid. That in quotation marks market cleansing reason not quite stacking up. What did you think?
Yeah, I don't know. I'm kind of sometimes a bit cynical with like the reason that bids get revealed to market. Like, not everyone is super forthcoming about cleansing and all that sort of stuff when they've been subject to bids. And I don't know if behind the scenes there's sometimes people like leak deals if they can't get in the door, and sometimes you threaten to leak a deal if you can't get traction. So it's been knocked back twice at the same price. The thought process I had is like, I wonder if the bidders actually kind of insinuated that they're going to leak something if they don't get allowed in, and then I don't know.
It's all a big chess game, hey?
Maybe, and there's definitely plenty of risk that no deal happens here and that no counteroffer eventuates, and that Azure doesn't get let in, no one else is interested, and kind of price reverts back to where it was before.
Yeah,
we're talking lithium in Ghana. Nothing is off the table of what could be happening behind closed doors.
And we should mention as well that they are currently 25.27% shareholders in Atlantic. Now that goes off the latest presentation. We don't know exactly what it is. That was a bit over a month ago. And Piedmont, who are 50% or will be 50% project owners, are also 9.3% owners in the corporate entity Atlantic. I just want to close off on a couple comments on lithium and get your guys' thoughts. So we've seen the price of spodumene hydroxide and carbonate, falling like a stone over the past 3 weeks in particular, but more broadly over the last year. So we're now at $1,650 US for spod and $22,000 US for hydroxide. I mean, the broader question is there more consolidation at play? You've got a number of players, for example, Pilbara, who have relatively substantial cash balances. Granted, they are putting a bit of capex in the ground. I mean, the idea of $5,000 a tonne of spodumene, coming back anytime soon seems very, very far-fetched. This is a much more normal price context we're in now. We all know commodities are priced at the margin, and this seems much more normal. It'd be interesting to see what happens to the lepidolite players in China and wherever else they are. I don't think we'll get much market news from those guys, but perhaps they start to shut off sooner or later if the price keeps coming down. But my question to you guys is there going to be more consolidation?
Oh, that's all that's happening at the moment, isn't there? Everyone's it's all M&A, buying shares, and Sigma put themselves up for sale. You've got Liontown's obviously coming online, but everything else is just all fight for control of things that aren't producing at the moment. So, and you look at what with there's all the uncertainty around the supply of lepidolite, how long it's going to take for these DLEs and everything to come online. It's like there's going to be still a big long lull period of uncertainty. So I wouldn't put it out of the equation. There might be some spike that comes within that period till the whole market has sort of got an identity, I think.
Would you be?
Who knows?
If you had a big pile of cash like Pilbara, would you be rushing in now, or would you be waiting?
Yeah, I suppose I can't give investment advice, but Pilbara, like,
Right.
who's the best? And I think Sammy said in the interview that'll come out in the next couple of days, like, Pilbara is so heavily shorted because they've got that fear that they're going to buy something.
Yeah, you're dead right.
So, but yeah, depends on what they buy. But look, they've made their deposit. Pilgangoora is no Greenbushes, but they've obviously made a lot of cash during that peak period because they were in production and did it well. So, yeah, what do you think, Trav?
I love talking about all the lithium deal stuff at the moment. So and I personally don't have much exposure.
Would you back the incumbents?
I think I need to do a lot more work understanding the brine stuff. I feel like I don't have a good grasp of the supply dynamics because I just don't quite understand the cost, the cost curve and where the real efficiencies are, especially with all the stuff coming out of the Atacama, the evaporation, all that sort of stuff.
And
I really want to wrap my head around that.
Can't forget about Thacker Pass. That's the sedimentary lithium hosted material. So if that works, that's a whole nother realm of lithium that can come to the market. So
yeah,
there's a lot of balls in the air at the moment. And I think I can't see that changing anytime soon.
I'm personally drawn to the kinds of opportunities where there's a lot of asymmetry to the upside and you've got protected downside. And I think it's a different investment proposition and a different risk profile outlook and stuff. But I think most of the opportunities in the lithium market, they're not asymmetric to the upside in the way that I like to play.
Yeah. Pretty sure your answer's heaps more intellectual than mine. I think I just talked out of my ass. But anyway, people listen. Boys, rapid fire to finish off. And did you do your little segment about things you got on the radar for the next couple of months?
I'm still
JD,
thinking.
you got one?
It's coming.
Still thinking.
JD, and he's kept it off the notes. He's going to surprise us, I think.
No, it's not coming today. I haven't thought about it yet.
Oh, right.
Rapid fire.
True North Copper, TNT, in trading halt, raising money at 12 cents. Remember, they IPO'd at 25 cents. So they've hemorrhaged a bit. 23% discount to the last price. Raising 10 million bricks with the ability to take over subscriptions to 15 million bucks. Ding, ding, ding. I'm participating in the raise. Full disclosure.
Yeah. Oh, there you go, Matty. So
Tembo's converting their debt to equity essentially, aren't they? They're paying out their Tembo loan and the what is it?
Yeah, they got two debt facilities there, and I think that's
DDPM working cap facility. So.
Yeah, but basically cash flow issues because they're mining at the moment at a project that doesn't have a reserve, which is causing some stress. You can see in the quarterly they're losing money. So this here, as I interpret it, there was this funny quote in the term sheet, highly advanced in execution of working capital facility. So they're raising money here. Tembo's is converting to equity. They're paying out the other debt facility. So they're basically raising equity to pay down debt, only to then get more debt because that's what a working capital facility is. I just think you pay twice on the same fees when you do that sort of thing. You're paying double the fees on the same capital when you're doing things like that. But watch this space. I just hope that the interesting stuff with True North, and I'm sure the reason you probably bought shares was not the project they're currently mining, but the other stuff that they've got.
Yeah. The TMT shareholder revolt. So remember the technology metals were merging with AVL, Australian Vanadium, which most logical merger in history. Same two tenements on the same ore body side by side in the Murchison. Released after market opened today. There was details in there about the transaction update, and there was 9.2% shareholders of TMT that have 20 odd shareholders that wrote a letter.
Yeah,
not happy.
that had some errors in it. TMT said.
Yeah, funny one. This one. I don't think there's too much of a story just yet, but 9.2% have apparently banded together and submitted the same kind of identical looking letter saying that they've got an intention to vote against the scheme of arrangement with Australian Vanadium, irrespective of what the independent expert report recommends. Very juicy though. I think we'll keep our eyes peeled on that independent expert report when it comes out, Matty.
It said they were going to the AGM.
Going to the vote.
Going to the the scheme vote. Geez, it'd be rude not to go to that one as well, boys.
It might be. Yeah, actually, good point.
Right. Anything that you reckon's coming up in a couple of months that you think's gone out of the news that might come back into it, boys?
I'll get back to you on that one, mate.
What about?
Can you throw another dart at the board?
You know who's gone quiet? I haven't got a prediction for this one, but you know who's gone real quiet?
Who's that?
Wyloo.
I think they've just become a miner, if you know what I mean.
Focusing on the MinCore assets.
Yeah. Like at the moment, suddenly you have production to worry about. I think your deal appetite dissipates because you got to, I'd rather be kind of doing deals left, right and centre than actually owning an asset and becoming a miner.
But Twiggy's got a lot quieter because you obviously had all the work with Wyloo, but remember all the stuff he was doing with his squadron arm, purchasing all she was a pretty big year for activity on the Twiggy front.
Yeah.
There's going very quiet.
Part of the charm of being private is that you don't have to report to people all the time. So
I don't know.
Yeah,
He can't stay too quiet for too long, I don't think. So
I don't know.
He's still in the newspaper every other day. So.
It'd be interesting to see if they get back in the news soon. Right, pull your bloody weight, boys. Yous are the ones with the intelligence here. You should be throwing some darts. Yous will have good darts.
Yeah, but I want to maintain the perception of intelligence, mate. And if I throw darts at me all the time, I'll lose it.
I'll happily take that responsibility for the team. Beauty.
Couple of sponsors to thank. Quite a few sponsors to thank.
Quite a few. God, if only there was a couple for the same amount.
Underground, Terra Capital, McMahon Mining Title Services, Future-Proof Consulting, Anytime Exploration Services, KCA Site Services, JP Search, Brooks Airways, and lastly,
K-Drill.
Hoodaroo.
Hoodaroo, money miners.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.